I'd like to welcome back to the stage Ying-Ying Lu from Silicon Dragon, and she's going to be introducing our China VC panelist. So Ying-Ying, take it away.
Thank you so much, Rebecca. Okay, we have a totally all-star panel lined up, and I'm going to welcome one by one to the stage each member of that panel. The first person is John Zai. Where are you, John? So there's tons of buzz in the media right now. If you haven't heard already, you probably should know that John Zai is CEO and founder of Cocoon Networks, massive fund. Secondly, I'd like to welcome Mr. Xiao Li. He's the investment director of Beijing Global Investment, as well as the general manager. And in addition, he runs China Unicom's incubation base here in London. Welcome, Xiao. Next, we have Karen. Miss Karen Winton lived in Hong Kong for a number of years. She used to run Invest Hong Kong there. And now she's come back to the UK, and she's a managing partner of Nest.vc. So she launched that here in UK. And finally, Ivan. Ivan Shyr is the investment director of Sussex Place Ventures, which is affiliated with London Business School, which is also his alma mater. So welcome, everyone. Does everyone have a mic? We have 3 mics. Okay. Yeah, so once you get the mic, I'd like everyone to actually go around. I did a brief introduction, but tell the audience, if you're not originally from the UK, which a few of you aren't, what brought you here, what brought you to VC, and what distinguishes your fund from other funds that are out there?
From me, okay, sorry. Well, I bring a note just in case my English is not that good, so I could read some words. Well, my name is Xiao Li. I'm from Being Global Investment. The reason why I'm here in UK because I came here for my immigration visa in 2013. I did a venture capital back in China before for a China Unicom. I was in charge of the China Unicom's young person incubation center for the venture capital's investment opportunities. We start our fund here in UK. Well, the reason because we want we require the immigration visa, when we start here, we have to find something why we are here in UK compared to United States. Why we didn't go to United States? So we have to find something strong advantage point here in London compared to United States. So that will be our investment target. And also we have to think about how we exit back in China because definitely London stock market is not our expertise. We can't exit here. We have to exit back to China. So we have to do research, find something advantage here in London compared to the United States, and also easily exit in Chinese stock market. So we start to do the research, and everyone, basically we all understand the China economy is going down right now. So the government will try to find some way to change. I mean, not change. It's industrial restructuring. Yeah. So basically, we have to change from the export-oriented economy to domestic demand-based economy, and also technology-motivated economy. So that will cause we research what kind of demand of the Chinese people, I mean, people of the Republic of China, they really demand. So that will cause to some problems. We have aging population, which will cause some investment opportunity here in UK for technology management experience in pension, nursing homes, medical treatment, and private hospital. And also we have the problem of environmental pollution. So which will cause some green energy investment, green energy technology, environmental protection technology here in UK. Well, compared to United States, because United States is a big country, so UK have a small country, you have to do the environmental protection technology. Oh, sorry. Did I say too much?
No, actually,
Okay,
this is great.
okay,
So
okay, right.
the background that Xiao gave,
okay.
thank you so much because I know you prepared a lot.
Okay, yeah. Sorry.
So the background that Xiao gave is actually a really good segue into one of the topics I want to focus on, which is how trends in China, so what's going on in China as a society, as an economy, is affecting cross-border investment. So let's continue with the introductions, but then also segue into that topic. Go ahead, Kay.
I'd hate for the slides to be on my face. Thank you, Rebecca.
It's for on both of you guys,
That's
actually.
because I'm too tall. You want me to sit on? I'll sit on the floor, should I? Okay, so I am a UK national, as you can probably tell. I lived in Hong Kong for 20-odd years, and I see some people in the audience who also did the same, so I better keep my remarks as close to the truth as possible. Before I joined Nest, which was last year, I actually ran a Hong Kong government program to attract startups from overseas into Hong Kong. So I know lots and lots about Hong Kong, and I'm a great advocate for Hong Kong. We heard earlier from James, I think, about how you can tap into Chinese diaspora when you're in the UK or wherever you happen to be in terms of your products and services. I would actually say the same is true for Hong Kong. We have a great market in Hong Kong, a lot of visitors, a lot of mainland visitors. So if you have a product or service, you can equally well test it in Hong Kong before perhaps taking it regional or taking it into China. So my background, that's it, really relevant to right now. But in terms of Nest, we're an early to growth stage VC, headquartered in Hong Kong, expanded very rapidly last year into 7 other markets. London was the first. We're also in Nairobi, Paris, New York, Singapore. As a VC, we're a little bit different. We are now sourcing a lot of deals through corporate-backed accelerators. We're finding that's a very successful model for us. And I guess here I'm really looking for startups in fintech, digital health, wearables, smart cities, and IoT. If anybody here with a startup in those categories? Okay, so come and talk to me later, and let's see. So I'm encouraging startups to think about expanding into Asia using Hong Kong as a base. Ying and I have talked about this interesting risk mitigation strategy, and I'd be happy to expand on that later.
I'll keep it short. How I ended up in London, really, I worked in China for many years between Shanghai and a province in Shandong in the semiconductor industry, in manufacturing, so hardware also. And then one day I sat there for many years, and I started there in 2004, and by the time I got to 2008, I was like, wow, this is really competitive market. It's changed a lot in the last 4 years. So I said, I better go retrain myself. So I ended up here at London Business School. That's how I ended up in London, and got a job in VC afterwards for Celsius Space Ventures. And because Celsius Space Ventures is owned by London Business School, our value add is we have a big network of 40,000 alumni around the world in all the different kind of industries, and we try to leverage that network to help our portfolio companies, really. And we invest in mainly, these days, it's called pre-A, the pre-A rounds and the A rounds, either in the software space or I take care more of the IP science space, a lot of deep science space. So that's it.
Thank you so much, John.
Probably our story is going to be a little bit long. My name is John Zai. People love to call me Jay-Z. I know I'm looks like Jay-Z, but it's Jay-Z. So basically what Cocoa Next doing, I'm just give you a brief introduction. We're basically doing everything about, anything about equity, investment and ecosystem. Actually, we're going to be launch the biggest incubation center in all over the Europe. I guess it's 7,000 square meter building in central location in Tech City. I mean, for Christoph Street, just next building of Bloomberg. We are launch a couple of different fund. Probably if the people read Financial Times or Bloomberg, you will know about these. We are doing a couple of different accelerator program, try to working with all the tier 1 accelerate program in Europe. We are doing some intellectual property platform. In 3 years' time, or maybe, I don't know, it still really depends on how fast we can apply for the license. We're going to be doing a technology bank. We're going to be doing a technology insurance company. Our background, some of our investor, you probably can check us quite easy in the, in the internet. So we just want to doing some like ecosystem between Europe and China. The reason we come here is very simple. I think Americans too expensive now, so we're probably coming to Europe to looking for some new opportunity. I think that's all, yeah.
Thank you very much. So for the 3 panelists here who are deploying, or I guess 2 to 3 panelists here who are deploying Chinese capital into the UK. So I think there's 2 ways to look at this discussion. One is kind of outbound Chinese capital flowing into the UK, flowing into Europe, and how that's being deployed. And secondly is China as a marketplace. So that applies more to UK startups or European startups who are launching into the global market, into China. And let's focus on the first topic. So as an investor here who represents Chinese LPs, why should entrepreneurs take your money? What are the challenges and also advantages of that?
I'm going to pass that to China.
I'm actually not hear the question very clearly.
So what are the challenges of deploying Chinese money here in terms of getting into deals, getting entrepreneurs to take your money, and also what are the advantages on the flip side?
Do you asking the employee, the startup to take money from from us?
Yes.
To persuade them? I don't think we need to persuade them.
Yeah, actually, for this question, I did talk with John yesterday about this question because we start the venture capital here, here in UK. So basically, we don't have the reputation. We don't have the history too much history. Even for Kunlun, they don't know Kunlun because it's quite famous back in China, but no one know it. So here, how we could persuade the entrepreneurs to accept our money is because we have the Chinese market behind us, and also we understand what's happening in Chinese stock market and also Chinese people's requirement. And to be honest, we are venture capital. We want to exit. So basically, before we doing the investment, we already think about the exit, road. And usually the exit road would be the Chinese listed company already. Something we might have strategy partner already back in China, which have their demand of this kind of companies here in UK, which could easily MA with them, and we could create back to the Chinese market, the stock market. So that's basically our strong point compared to local venture capital, because they might have to quit here. Exit here in UK, in the London stock market, which is now our expertise. That's our strong point, I think.
I think what we're looking at is actually being a bridge between the UK and Hong Kong. So in Hong Kong, we're known for helping companies, startups, commercialize very quickly. We have an expertise in marketing and commercialization of startups, helping them grow from zero to hero. We have access to a whole bunch of professional investors. We have a great network of professional investors around Asia Pacific, so we can provide that access to Asian capital. And also through our accelerators with corporates, we can provide access to their networks. And often we find with the startups that are coming through our accelerators, the network is the most important thing. If you have a healthcare startup, you want to get it into Asia, how are you going to do that? You need those contacts, you need those connections. So that's where we're coming from.
All right, so to everyone here, what would you say is the value add of the UK, in particular, startup ecosystem relative to the rest of the world? Because you have Silicon Valley. You guys talked a bit about why you're in Europe, but give us kind of the bigger picture of how all the sectors fit in on a global scale, and what's the strength of the European market?
Well, John said the key reason, didn't he? Valuations. Right? I mean, that's true for all of us. Valuations here are terrific.
Yeah, well, John mentioned a very strong point for, compared to United States market, because all the Chinese venture capitals have already go through, they visit United States every month, actually, for all the venture capital. But Chinese venture capitals here were not very activity, like, it's not very much deals here. And also, I think Europe, I mean, well, I didn't do much research about Europe, but I did some research about UK. So I think UK got very strong point in K-12 education compared to United States, and also design. I mean, product design, which United States, they don't have that long history. Design, you don't have to, you have to have history to design proper product. It's not pure creative. It's a research. So well, that's our expertise for the venture capitals. We want to find some design teams or design studios which based on research, not based on creative. And also a culture, creative culture, of course. Yeah, well, I just because I prepare. Yeah. Well, that's it.
Thank you so much. So,
For UK, I would say, I'll relate it to China since we're talking about China. I think the biggest connection potentially and the biggest opportunity between the two countries is probably in fintech. In many ways, there's been a big fintech movement here, and you see, we're actually sitting in one of them, Barclays Accelerator here. But if you go to China, you'll see in many ways that actually fintech is in some ways even more advanced there and more pervasive throughout. None of my friends in China they only pay through WeChat, right? You don't use cash in restaurants, and I don't know, you go to the movies and stuff like that. You pay for everything through that already. And you look at some of the startups, even Alibaba, right? They have through Alipay you can do investments, short-term investments, almost like money market stuff, right? And that's been around for a couple of years already, and I think in many ways Europe's trying to catch up on that in some ways, even though the thought is here. But there's a lot of links and there's a lot of thoughts, and even and eToro was one of them that did really well and went and got Ping An's investment. So I think there's a lot of linkages in the fintech area, and so there's one thing that's a big growth factor here in UK, I think, is also in China as well. There's a linkage there.
So Ivan, you've done a lot of work with European startups here who want to launch into China, so into the China marketplace. Thank you, Karen, for correcting me yesterday. I said the China market, and she said, there's so many different segments of China, you can't really call it one market, so multiple marketplaces. Tell us about how that's going, how that's gone, and maybe highlight an interesting case of bringing a UK startup to China.
Yeah, I mean, I think for European companies overall, if you're actually Europe-based, right, and you're looking at the Chinese market, I think you have to be, and you're not going to be. So my first point is, if you're going to be a Chinese consumer-facing product and your end customer is Chinese, and in China, I don't think you should be here. First of all, you better move to China because that's where your customer is. And no matter what startup you are, you got to be close to your customers, especially in the early stages, to understand, get that feedback and whatnot. So that's one. So for the companies that we invest in that are actually located here, a lot of them have to be B2B companies. And there's some kind of standard interface, whether it's an industry interface or whether that's a product interface that is kind of standard. So it's not like we're dealing with a separate market, whether it's in Europe or whether it's in China. It's relatively the same customer demands and customer needs and customer interfaces there, right, with the end users. So when we advise them, of course, for most of our startups, their first market is in China. It's an expansion market because that's why they're, so it's either European, doesn't necessarily have to be UK, sometimes it's Europe, it's UK. And in many cases, we went to the US first. But we have examples of both a med tech company, as well as we have examples of a, it would be a metals recovery company. And both those markets are actually quite big in China. And through when we got to a certain stage, and we will review strategically with these companies, when is the right time to go into China, we would help them evaluate when the right time is, and how do we find the right partners, because that's the last thing you want to do, is to go in with the wrong partner with the wrong strategy. And so that's kind of how we try to help, and why I try to help with my experiences and networks there, helping make that transition in and develop that. And in many ways these days, one of our, just a short example of one of our med tech companies, the actual opportunity came to us where there's a distributor of a medical device, and we're actually discussing about US licensing. And the first thing they asked for is, on top of US licensing, I want the China license as well. And so that negotiation starts, how much each region they're going to pay licensing fees for. So in these kind of, and as one of the earlier panelists spoke of, medical industry and the environmental industry are two huge topics in China because of the needs for them and the investments that's going on there. So in those markets, it tends to be a little easier in terms of the demand needs and demand-driven stuff that at one point, maybe for some companies it's going to be earlier, some companies going to be later in the development, the China market actually becomes quite important.
Awesome. So to kind of contrast that, Karen, if I was to ask you, so I'm an entrepreneur here, and I'm thinking of launching my product in China, what is the spiel that you would give me about why I should set up an office in Hong Kong instead?
Well, yes, you preempted me. I'd say come to Hong Kong, of course. There are a number of reasons, and I think some of them are fairly well documented. The very low tax rate, regional location in terms of being in the middle of Asia. But it's also a very regulated economy, and it's a very stable economy. So you find that, say, the tax rate I just talked about, the 16.5% corporate tax and income tax capped at 15%, which I really miss. Those rates, actually, if they're ever going to change, you get lots and lots of advance notice about that. So from a business perspective, you can plan your tax liabilities for a long time ahead without having to worry that perhaps tomorrow or next week or next month that tax rate might change with very little notice. And in other economies in Asia, that can be an issue. There are also things regarding the rule of law and the access, the IP protection in Hong Kong is of course very important if you're a startup with hardware and other elements that you're developing. And of course, access to capital, free movement of capital, free movement of people, freedom of speech, etc., etc. These are all things that underpin Hong Kong that are very good from a business perspective. And Hong Kong's ability to get you set up in a business with $1 Hong Kong dollar, which at the current rate of about 12 to the pound, I think, is not very much money. $1 Hong Kong dollar, one director, one day, you can have your company ready to go. You don't have to be doing business, but you can get set up. So it's very easy. It's a very easy environment to work in. And of course, it's English speaking, which helps.
What about Singapore?
Right. Same is true for Singapore, but Hong Kong gives you access. Well, you try flying in a day from Singapore to Beijing to do business. You can't do it. Okay, Hong Kong, if you get the 8 o'clock flight, and I can say this because I've done it, you can be in Beijing for lunch, meetings in the afternoon, you get the 8 o'clock flight back. So location's important. It's not the only thing. If you want to go in Singapore because your business is leaning towards India, much better to be in Singapore than Hong Kong. I can't diss Singapore, great economy and fabulous crab. So.
All right, I have a question for John. So John, you have super ambitious plans. I can't even list all the different parts of this ecosystem that you want to build. Can you tell me a little bit about why no one has done this before in the UK?
Wow. Why? I don't know. I mean, to be honest, when we started doing this, I don't know why nobody doing these kind of things before. And I think for us to doing this is by coincidence because two of my investor. I mean for the holding company, Coco Networks. One of them, they just coming here to purchase a company for the very latest stage. Another guy is just same as you, doing immigration here. So they stay here, and we're starting to think about what we should be doing here. I mean, I told you, I mean, when I will actually make the decision is because after I come back from the web summit, and I really seeing the valuation. I mean, to be honest, I apologize to seeing the startup company here is very not expensive, but to be honest, the valuation is really good. Yeah, very, very good. It's not cheap. You can say cheap. You can say, yeah. I think Mr. Deng from the, I don't know, Beijing Guang Venture, I mean, he told me, he asked me, John, how are you going to be stay here to doing this kind of thing? Because we're talking about venture capital investment. You're going to be doing, if for most of the Chinese investor, I mean, they always focus on the U.S. market and the Israel maybe. No one done this anything before in the early stage and technology company in Europe. I think the most of the reason is, first of all, local VC is basically as a local business. You have to be local.
That's why I asked, what are the challenges?
Yeah, you have to be local. This is a very big problem. That is why we're spending so much money into a very old building. So we try to telling people we're serious coming here. I mean, we're doing venture capital. We're not stupid. We don't want to spend like 13 million to decoration old building. We're actually prepared to stay here for a long term. For a lot of Chinese investors, they come in here for a couple of days and they go back to China and they never show up. They probably just saying, is there anything we can actually, purchase? And we probably can bring them back to China to putting the same accountant, try to making the company, the listed company more valuable or something like that. To be honest, I mean, I try to ask you, because all your question is like relevant. When I first doing this, right, we don't have a plan to open all this kind of thing, a big facility. We try to looking for some really good deal, but we can't. I'm failed. Especially after we launch our kind of like funds, right? People always asking us to do in the leading round because they thought we're super rich now. We have a lot of money. But the thing is, when the people asking to do in the leading round, which means that round they must be having a lot of risk, right? They don't want to take all the risk. And in the meantime, if you want to get in some really good deal, people don't share, especially like, all these kind of best VC here, Winton or Passion or Octopus, they don't share some really good round with you. There's no one from them right today, right? Oh, you're from there. Sorry about that. If we have to talk about this, we're talking about so it's very difficult to doing the management after we invest them. So you have to stay here to doing the, after management or something like that. And I think it's just no one to raise this awareness, and this is exactly what we try to doing. I mean, one of the very important aim we try to doing is we try to raise the awareness for Chinese investor, let them to understand that USA and Israel is not only destination for them to doing the foreign investment. Yeah.
And how much capital are you investing, John?
But you can easily find it on the everywhere. It's just on the news. But that one.
Just tell everybody here.
We're planning to put in like 500 million pounds in the next 3 to 5 years in London. Particularly on the tech sector, high-tech sector. And that one we're not doing by ourselves. Of course, it's with the Shanghai government, kind of like leading fund together to doing this. Yeah.
All right, I think we're supposed to wrap up now and take questions from the audience.
Yeah, really quick. No comments, just a question, because we're running a little bit late.
Hi there, I'm Jason Tang from Potter Clarkson, intellectual property firm. I'll keep it quick. Do you face any challenges in educating startups on the importance of IP protection? This is for the entire panel.
Definitely, we have a problem of the IP. We worry about any product if we doing the investment after to go to Chinese market. So basically, my company, we did a couple of investments in K-12 education here in UK already. We will more focus on the content company have. The company has the content, and also the company got the history, which the Chinese market is hard for them to copy. I mean, competitive, hard for them to copy. And also, if the time window would be 2 to 3 years, that'll be good enough for us to exit. So, so if you have some, that kind of IP, it's got history, which can't be copied, and that IP do have some content developed by yourself, which like some cartoon or something like that. It's quite hard for them to copy. That will be helpful. Thank you.
One more question.
John, what's your biggest risk with investing that amount?
Sorry?
What's your biggest risk? What do you think is the biggest risk
Risk.
that you're facing? Yeah.
Risk.
Risk. Yeah.
Risk. We don't exit. That's a risk if we don't exit. Right. Oh.
Venture capital, right?
Yeah.
Okay.